Good morning. Wow, markets come back strong, huh? Well, makes you wonder, was that the end of the correction? So markets went down based on this China virus. And so now this morning, markets are going up based on, what's the news say there? Markets are jumping, signaling recovery on Wall Street from a sharp when a coronavirus-led pullback with fresh intervention by China's central bank calming fears. Well, maybe so. I got an email from someone in China, a subscriber, late last night, that he had some questions on something. So I sent him a little video explain. And he says, this virus is costing China billions of Chinese New Year in the biggest holiday in China. This year, no one is going out. Many of the big attractions are shut down. Many of the borders are shut down. It's also costing Thailand, Cambodia, and other Asian countries because some are not accepting flights from China. This is with TARF. I don't know if you tax with TARF and virus scare. China is feeling the pinch in the pocketbook. So, no, I know this fella. He's been a subscriber for a little while. We've been emailing back and forth. Anyway, so look, the news, as we know, especially even last year with the China tariffs and trade wars and all that, it's been some violent ups and downs based on that. And there's no doubt that markets have had some damage done. And, maybe this correction that's going on in as far as indices go, and I've seen this many times over the years, where the indices chop around, kind of a wild trading range, which sideways, while the underlying stocks get crushed. So don't think, the market being up like this, the coast is clear all around. So, just kind of little comment there based on history and what I've seen. And we talked about this in the room, when institutions are dumping, their leading sector, that is not a good sign. Now, look, the weekly trends are in, uptrends, and that's a good thing. That's I kind of still like pineapples, Alex. I just kind of backed off on them a bit. So the history won't repeat anyway. So look, markets have these kind of gyrations, and when we see, drops like this, we should respect them and just let things settle down. Anyway, big moves like today's a big move. We see the Dow is up right now. It says 353 points, right? Well, that's a relatively big move. This was a relatively big move to the downside. Now, the level of retracement back up is encouraging as far as the potential for the markets to correct sideways rather than staying in the lower half of the wide range bar. But big continuation moves happen when ranges contract, not when they are expanding back and forth against each other. So this is just a picture of uncertainty. So just keep that in mind. Day to day, we'll deal with what is. We'll take advantage of what is on its own page. If something is going up or down with some momentum, we'll try to take advantage of that. And when things don't work, we'll get the hell out of the way, right? And protect our capital. That's what we do. So let's see what participating as much or maybe a little less. Let's just start with the S&Ps. Very nice. Right back up to the red bar. And so now we're coming up to the top of the trading range. As you can see, gap down, up, fill the gap, down, right, down, back. We've got a trading range going on here. So as we do every day, take note of where resistance is, where support is. And so let's throw a little green line down here now that we have this. We kind of got a little bit of an upper level there. So now the question is, can it get through here and continue to push up? So having the move that it's had here pre-market, I don't know why I have this on a 90-minute chart. I guess I wanted to condense the information. Usually look at that on a 60. Once it reaches resistance, we want to see the reaction. Now, one reaction could be, and I think this is the one you'd have to be most careful of, is if it pops through here into 3,300 at the open. Meaning it continues the rally at the open, sucking in the last of the buyers. And that point, it probably comes back in again. Because anytime something goes from the bottom of the range to the top of the range and it breaks out of the top of the range, historically, that pattern results in a retracement back into the range. So don't be a Johnny come lately if it pops. Now, if it goes sideways here, let's say into 10 o'clock, that would be a positive. That's what we call bullish price action, absorbing supply. And there are sellers up here. Right? That's technical analysis 101, resistance, support. So if it can go sideways and we get bottoming tail bars, bullish 180s, patterns like that, that would support a bias that this could continue to push back up. And then we'll see how far it can get. On the other hand, breaking below, say, this level here, right, this wide range bar up, I think would put in a little short-term top up there. Qs, right, have been showing relative strength, and they continue to show relative strength. So they're almost back up to the old highs here. And so with this pattern, again, coming up into resistance, same as the Dow, you know, here's its resistance area. Maybe it pops up to make a new all-time high. And we'd have to be careful. You know, again, same story, bottom of the range, top of the range. We don't buy it. We don't buy that. We wait for pullbacks. We wait for consolidations, some kind of bullish pattern, and we'll see where it goes. YM, we went through. No, we didn't. Right? We looked at the beginning, yes. But anyway, showing relative weakness, which it has been doing, but close to its resistance as well. So common sense here. Right? Prices have been moving up here, right? Overnight, pretty much straight up. And now they're coming up to resistance. So just because the market is up, right? You wake up and you turn on the TV or go to some website and say, oh, the market's up 300-400 points, right? Okay, where is it relative to resistance? Right? Is it smack into it? Which means, you know, sit back and wait to see what the reaction is. Russell, back above the high of the big bearish bar. Remember yesterday we talked about this being the weakest and leading lower. And I said, if, you know, if things are going to go down tomorrow, this is the one I'm least interested in because it's so close to support. So now it's retracing back up. It's coming up to its respective resistance area up here. So while we've gotten different pictures across these markets, they all have in common that they're coming up into their respective resistance areas. And so, you know, unless, well, we could be shorting this after a little while. We'd have to see some kind of a failure. But again, we'll have to see how things unfold in the first few minutes to half hour or so. Oil up a little bit, no surprise with it being down at the bottom of the range. Right? Top of the range, bottom of the range, buyers, sellers. So buyers begin to show up here. And same story where when we were looking at the indices up at the top of the range, we wait to see what the reaction is. Can it consolidate? Can it break out? And the same thing here, right? This is a big momentum move, which, you know, creates that void above. You know, intraday, we can see smaller areas of congestion. So now crude oil is at this area of resistance. And what we had this discussion in the green room yesterday, by the way, where we see stocks in downtrends and we look at the hourly chart where they begin to stabilize. So one green day isn't a reason to consider buying, not from a swing trading perspective anyway. But what we look for is maybe over 2 days, maybe a third day. What we see is the hourly charts begin to flatten out. And then that has created a support area and moves prices away from the supply or resistance areas and gives us long opportunities. All right. Okay, Dan's taking care of comments in the room. YouTube's quiet. They're in awe. And gold having a negative reaction as the market has this positive move, right? They've been having this inverse relationship here. So crude, I'll get it here, gold, retesting this topping tail. So it's having this negative reaction as the markets are moving up. The markets are moving down. Gold would probably be pushing up above the high of that topping tail. And that's the way they've been trading right now. So we'll see if buyers want to step up here. And as we do every day, we take it day to day. Silver, right, just kind of messy here within its trading range. And let's take a look at transports, right? This was the damage that we talked about yesterday, this breakout that looked like it was heading up here and then fails, right? So yesterday we talked about, well, can the transports hold this bottom of this range here? Because if they don't, well, now it opens up the door, right, to moving down to even the lower part of the range. So again, wash and repeat, right? What's the reaction? Going to go sideways here? Does it chop around? Does the hourly chart flatten out? Can it start moving back up again? Right? So while the transports have shown relative weakness, for a long time, they were improving. That's failed. We've got the markets up here today. Is this just a giant jiggle where the markets will continue their uptrend? I suppose that's a possibility, but these transports have to come back. The Russell, right, which has been badly damaged. So this has a lot of work to do before we could even consider getting, bullish as we were before, as things were trending up at the beginning of the year. So if this is going to be any kind of a topping pattern of any significance, time will tell, but we do know that topping patterns, ranges open up, right? The distance between pivot highs and lows, daily ranges open up. In other words, things get whippy and they get big ranges, and that's what happens at turning points. So we'll continue to monitor this. And look, we got Google down this morning. Dan will probably cover that. You had Amazon jumping, Tesla's going into the stratosphere now. Facebook is looking questionable. Transports, as I showed, broke down. So it's kind of okay day to day for day traders and volatility, but as far as the swing trading setups go, it becomes more difficult with wide, big ranges and whippiness. So anyway, that's it from me. And all yours, Dan. Let's see what today brings.
All right, good morning. I was just updating an alert here. Yeah, a number of our shorts from the weekend letter obviously didn't trigger, so I'm just canceling them. Deep retracements. So no harm. Yeah, of course I'm going to cover Google. All right, we have a Netflix put spread, beautiful trade. I tightened the stop pre-market. We're out of half yesterday. Tesla, Absolutely. This is on my short bear call credit spread list. And yeah, I said yesterday, the market doesn't care what I want, but isn't that exactly what I said? Let it gap up $100. Who cares? And that's exactly what it's doing. That's funny. And in terms of reading sentiment or contrarian indicator, hey, Ludwig, welcome. If you can put your drop down to all panelists and attendees. I bounce back and forth, CNBC and Fox Biz when there's commercials, and it's like everybody's talking about Tesla today. And when I hear statements like, there's no stopping it, that's what one guy said, Andrew, whatever. There's no stopping it. And it looks like this, the end is near, the short-term end. We talked about this yesterday. Whatever metric of extended you want to use, and I just suggested on a longer term basis, the distance from MAs, we'll see. But this is Tuesday, so I will definitely be looking for a call spread, and then if it sets up intraday for a short, we'll go for it. Yeah, I don't care. I mean, the people have been predicting 25,000 in Tesla. People have been predicting they're going out of business. Remember, we shorted, for those of you who have been in the green trading room for over a year, I shorted the $20 puts on Tesla, and I got like $1.35 for them. They were priced for bankruptcy. And that hedge fund guy, Barron, who's very successful, he's just nonstop because he's heavily invested in Tesla all morning long. He's just blah, blah, blah. I think and I guarantee that's part of the pumping it up right now. With the markets, does anybody have a definitive reason of why the markets are up so big other than all I could see was, oh, China's adding liquidity? Well, guess what? That was in Barron's on Saturday, which means it was out last week because it's newspaper, prints old news. So of course we know China's been adding liquidity to their system. So why are we gapping like this today? I don't care. I'm just curious. It's funny when the news media doesn't have a reason to put in the blank. Oh, the markets are up big today on blank.
Maybe because shorts are covering because they're afraid of getting destroyed in a bull market. And
but why would you cover? It was a weak close yesterday. Well, we talked about it into the close. It was bullish retracement into the red bar, but then we closed at roughly 50% with a topping tail. So I left the day totally neutral. Well, why would that spur a 350-point Dow rally of short covering? I don't get it, nor do I care.
Same reason people that do credit spreads cover before the spread hits leverage.
Yeah, but then they should have covered yesterday.
Everybody has their point, Dan, but come on.
All right.
Maybe they start hedging. They're holding shorts and they start buying futures to protect their positions that they're not covering.
Yeah, I mean the fancy traders, sure, they hedge like that, sure. All right, Google, Nick. Why Google beat but stock is down? Nick, that's a trick question, right? You're just being funny in the morning. Come on, that happens all the time. We don't care about the news. It's the reaction. The reaction to the news means I don't care what the news was. You know what? I didn't read one iota. Of commentary on Google's earnings. I don't care. It's the reaction of the collective market participants to what was expected is the reaction. So 1438 will do what we do every single day with gappers. It's gapping, to support, but it's bearish. It was bearish pre-market, but now it's making a higher high on the 5-minute chart. So I'm doing nothing. I like Tesla better. pre-market setup because look, it's starting to roll and it's making lower lows and lower highs. So just eyeballing it here, it's going to be very, very juicy. The premiums, because you know the juice, the demand for calls and puts goes up on demand. The volatility goes up when markets sell off for higher demand of puts. And guess what? The volatility on the calls go up when you have a rocket ship like this and everybody on the news is just blabbing about it like it's 1999 to party. So trust me, these calls are going to be very juicy. So we could probably go, even for Friday, we could probably go $40 higher and get juice. So that's that. Let's continue now with gappers. Our opens. We only have 2 opens in the weekly options trader on Netflix and Alta. And we have 11 opens in the swing ladder, which, believe it or not, is kind of light for us. The only short we have is JP Morgan. I have the stops over this big green bar. So we'll just let that play out. No, I'm not going to adjust anything. YouTubers are asking about Win. Win, I was considering that as a put spread over these highs. I don't know if it has earnings or whatever. I forget why I didn't do it. I don't know if it was a good spread or whatever. It gapped up and now it's closing the gap. I don't see any compelling pattern to do anything there. Another YouTuber, ALB. 8250. Yes, that looks fantastic. This is, you know, kind of the feel of a little bull flag, you know, not textbook, obviously, but it's a gap up from multi-week consolidation. I like it. Yeah. So it's a little bit light volume. Let me put that down here. I'll watch it with you. But our 2-step process is now within the first 30 minutes, let's see if it sets up in a bullish manner. You got a bullish weekly, bullish monthly, target, just eyeballing $90. Yeah, looks good. ALLT 1160, the gap's too big. Light volume. I'm just going to delete you. Right, my sole job in the morning is just to winnow down my list to the, you know, what I want to focus on in the first hour. So 335 and change. NTs, McGraw, this is a put spread candidate. ARE 165. I can't tell what you're doing. We had a bunch of earnings again. I don't know why my 5-minute chart is. All right, thanks, Alex, for the news. Maybe, yeah, that would, you know, kind of explain Win slopping around there. SSD, I can't tell what you're doing. NXP, 131. There's no compelling pattern to me. A WWD 120. This is a bullish gap, WWD. I'll put that in the window. Well, I'm going to get rid of Google here because I have it in my other screen. But WWD, it's in a downtrend, right? Lower lows, lower highs. But the fact that it's gapping over this consolidation with a price void, that's a definite put spread watch. Water's getting shellacked, 214 way down here. Gap's big, we'll come back to it. WDR, I don't like the way it trades with all the overlapping bars. 154, there you go. That's a bullish breakout to all-time highs. This would be a beautiful no-brainer trade if it was just gapping to 152s and then took out a 5, 10, 15-minute high. But that's definitely on the list. Let me add it on my other computer. CBH, ALB, WWD. NXPI beat and raised. Well, you know, doesn't mean anything to me. Can't tell where you're gapping. And you're a mess anyway. Hub, I don't like the way you trade, all the overlapping bars. IT, we got 1 minute, 159. Bearish gap, breakout failure, possibly a call spread candidate. 226 and change. Bullish gap. Looks like to all-time highs. It's starting to get extended. Look at the distance, 20, 50, 200. We'll come back to it. ARM. Oh, that's loud. ARMK, no interest. ATI, downtrend, you're a mess. AXE, that's been a beast. McGraw, 30-minute high, put spread candidate. LII, can't tell where you're gapping. VSH, bearish, but no pattern. TDG, it's not open yet. STX, now put spread, McGraw, nice gap. Put spread under here if you can get anything. SPG, if you know that's on a downtrend. PBI, $4 stock, no price void, you're going. MTG, you're a mess. Maybe put spread, if anything. Light, there's a bullish gap. Let's see if that sets up for a put spread. I see Tesla coming in already. Let me check the quotes. I'm going to grab a screenshot. Yep, the 950s are $15. Let me get it loaded up. You know, remember, this feels like deja vu to me that the other day, one of you did a 5-minute low and you got paid for it. And then I waited for a bounce. These premiums are insane. 970. We can do a $30 wide for $345. My gosh. All right, let's do it. Let's do the